How you doing? Pablo, good to see you. How you doing? JP, good to see you. How you doing? How you been? It's good to be back. Tor, evening, good to see you as well. How you doing? Manny, good to see you. How you doing? How you been? Jason, good to see you. How you doing? How you been? Glad to see you back, Miles. Glad to see you as well, Jason. Hello, Miles. Good to see you, brother. Good to see you as well, T. How you doing? I'm just gonna pin the live show. Pin to your profile. Pin. There we go. Hello, Miles. Good to see you as well. Okay, the live show is pinned now. And for some odd reason, there we go, it's working. Okay, so since I've been gone, a lot of things have been happening inside of market space, which we're going to cover, on tonight's live show. What's been happening inside of market space, why we're having so many essentially downturns inside of market space, and the level of manipulation is ridiculous right now inside of crypto space. But it's all an indication of what's to come next. With all this market crash, essentially with all the market crashes that are happening, we know something bigger and better is essentially down the road. In other words, due to the Clarity Act, due to the amount of ETFs that are coming through, and due to another factor which nobody's paying attention to inside of crypto space, which I realized, which we're going to cover on tonight's live show. What's the night? Let's see where we're at. Good evening, Miles, CMF. Another great welcome back. Let's go free and forever. Thank you so much as well. Good to see you. Good evening, brother Miles, and evening, CMF. Good to see you, all funky brother. How you doing? When's the nightmare going to end? Soon, I would have to say, but more downturns could be expected. Morning, Miles and CMF. Glad you are back safe, Miles. Hope you had a good trip. Thanks so much, Shelly, for that. I did. Good to see you as well, Shelly. Morning. How you doing? Good to have you back, Miles. Good to see you as well. How you doing, artisting? How you been? We need positive energy. Let's go. Hello, Miles and CMF family. Good to see you back, boss. Hope everything went okay for you, sir. It did. It really did. We all need reassurance. We need Miles. Let's go, funky brother. Good evening, Miles and CMF. Glad to see you. Good to see you as our SB. How you doing? Greetings, Miles and CMF. Hope all is well. Good to see you as well, Ray. How you doing, brother? How you been? Good to see you as well. Now, let's go through the intro, disclaimer, what we're going to go through on tonight's live. A lot of things have been happening, which we're going to be discussing on tonight's live, mainly due to the downturns that we're having and what's to come next. And why are we having so many essentially sudden bursts to the downside and sudden bursts to the upside? The market's all over the place. So, welcome to the CMF live show. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday, Friday, 10 p.m., long time onwards. For the most recent news regarding cryptocurrencies, CBDCs, AI, politics, regulations, all the information you should know about regarding the world completely transforming into a digital space and to get ahead of the game. Also, we do Q&As on this live as well, which means if you do have any questions, put it down in the comment section. I'm more than happy to help you out. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And also, thank you so much to every single person from the CMF who has already straight away liked and retweeted this live show on X, if you're watching us on X. And thank you so much to everyone also who's watching on YouTube right now, who's also liked the live show straight away as well. If you haven't, CMF members, take 1 second to smash the like buttons and the retweet buttons, and even put a comment outside the live. Now, let's go through essentially what's been happening so far. So, the news topics we're going to be covering tonight on essentially the CMF live show is regarding what's happening with the Fed, what's happening with the market space, what's happening with the ETF space, and something else that nobody's talking about of essentially what's happening behind the scenes. So, the first one we're going to go through is regarding the Fed, which was a lot of people were expecting some sort of rate cut announcements to be coming out of the Fed, but it seems like, according to the Fed, they don't have all the information they needed to make some sort of a vital decision on that matter, due to just coming out of a government shutdown. So here it is. A shift in financial market anticipation is transpiring as traders adjust their expectations. As the Federal Reserve approaches its final meeting of the year, a significant alteration essentially lingers in the air, guided by data points that unexpectedly influence decision making. The data emission essentially now presents a fresh challenge for economists who have essentially been closely monitoring trends. Global trade activities and physical guidance continues to evolve, adding essentially further complexities to the monetary landscapes and creating uncertainties about interest rates, which essentially is another impact that the market had to go through today. The primary concern in the upcoming Federal Reserve meeting revolves around the potential adjustments of an interest rate cut. The market has witnessed a notable percentage shift. Traders now signal only a 33% probability of a rate cut happening in December. This adjustment stems from the absence of crucial data, forcing the Fed to rely on past essentially statistics and economic indicators. As the year closes, such developments contribute to forecasting uncertainties among industry analysts. The lack of key data points challenges the Federal Reserve's capacity to make informed decisions. In financial economics, essentially in financial ecosystems, accurate data guides assortations and supports critical thinking, essentially. Without current essentially insights, the Fed's essentially grasp on economic health, inflation, and employment figures remains restrained. A spokesperson from the Federal Reserve noted and said, reliable and updated essentially data play a critical role in timing of policymaking decisions. The absence of this information creates a veil of essential unpredictability around the monetary policies. On the traders front, strategies are being essentially recalibrated to accommodate these developments. The community's awareness of the Federal Reserve's decision-making constraints leads essentially them to adapt quickly, influencing market outlooks and investment considerations. As a result, traders assess risk essentially differently to navigate the uncertainty financial terrain, with prolonged effects prolonged lingering behind December meetings. The ramifications of missing data waves build a ripple effect, nice use of words there, impacting several sectors. Economists acknowledge that the short-term essentially movements could have long-standing consequences, and they consistently urge for the transparency and additional resources to combat situations like these. One economist even emphasized by saying, comprehensive data is essentially indispensable for avoiding missteps in economic strategies. The simplest way to put it is that the Fed doesn't have the data it needs due to straight coming out of a government shutdown. So therefore, they can't make any sort of informed decisions, which puts the market on uncertainty levels, which essentially adds more to the pain of what the cryptocurrency space is going through. And so this essentially there is the stock market as well, and the tech stocks that are going through so much uncertainty as well. Uncertainty creates volatile stages inside the market space. And I know Bitcoin is supposed to be the safe haven to risk, essentially the safe haven asset to save the day, a hedge against everything. But the reality of it is it hasn't played that role for a while now. Even on Bloomberg yesterday, on Bloomberg Live, if anybody who ever watches it, it's always good to put on Bloomberg Live on YouTube, just play it, and it's just 24/7 going on. They even talked about essentially the economists that they had over on the podcast on Bloomberg. They talked about how Bitcoin used to have the title of safe haven, the risk off asset, the digital gold, but it seems like it's not playing that role now. And that is actually a risk on asset, the way it's moving and the way it's following tech stocks for the time being, which is quite true, to be fairly honest. But that doesn't mean it's all, doom and gloom and everything's going to be going sideways essentially for a while. Also, to add a little bit more pain on that situation before we go into the good news, BlackRock's Bitcoin ETF sees records of outflows, $523 million. On a recent essentially trading day, BlackRock's iShares Bitcoin Trust essentially recorded an unprecedented outflow of $523 million, sparking concerns inside the cryptocurrency market space. Such substantial essential withdrawals highlight increased volatility affecting Bitcoin's prices and triggering substantial movements within derivative markets, potentially signaling essentially broader market instability. BlackRock's Bitcoin ETFs experiences a record of outflows, sparking so much market debate. BlackRock's essential Bitcoin ETF sees substantial outflows, raising concerns about market stability and the future price movements of Bitcoin's footsteps. Now, BlackRock's led essentially CEO Larry Fink is the world's largest asset manager, as everyone knows him. And as cryptocurrency ETF face significant outflows and pressures, and such movements is leading to changes in both spot and derivative markets, raising concerns among investors. The substantial outflows on BlackRock ETF triggered notable volatility in Bitcoin's footsteps, as seen in exchanges like Binance and Coinbase, and on-chain analytics observed increased BTC movements back to exchanges, potentially indicating sell-offs or repositioning. Financial experts highlight that such outflows might signal cautious towards Bitcoin as a long-term investment. Analysts also pinpointed elevated shorts essentially in the derivatives markets with negative funding essentially rates, suggesting potential for market stress or essentially future squeezes inside the market space. Past instances like the Grayscale Bitcoin Trust, similar outflows in 2024, saw similar essentially Bitcoin price corrections, and historical trends do indicate such outflows often affect market confidence and derivative market essentially volatility. And experts like Arthur Hayes, for example, suggest that large-scale outflows create essentially structural risk in derivative markets. Analysts also predict that substantial short positioning could either lead to short squeeze or the price cascade essentially near term. Arthur Hayes, former CEO of BitMEX, said, "Derivative setups look increasingly dangerous when spot outflows like this hit, and futures funding is already flashing warnings." So many people got liquidated essentially in the past few days inside the market space. Roughly about $103 million plus was in all liquidations essentially inside the crypto space, regarding people trying to short the market or trying to long the market, because the market is just doing sudden outbursts to the downside, sudden outbursts to the upside. But it's not all doom and gloom regarding essentially Bitcoin or the cryptocurrency space, and it would be better off. I mean, everybody would be better off inside the crypto space with a Clarity Act. Even on Bloomberg, they were talking about how, yes, the crypto markets are going through some volatile stages right now, but once we get a Clarity Act, once we get regulations in place, expect the crypto market space to be like fireworks going on the upside. But before we get a Clarity Act, before we get regulations, this market is highly manipulated right now. Also, as I said, it's not all dooms and glooms. Bitcoin sell-off sparking bear market panic. But 10x Research warns traders may be looking at it the wrong way. So there are a few analytics companies that are coming out and saying everybody should start looking at the bigger picture, not the short-term footsteps. The warning is clear. Markets that look indestructible can reverse without warning. The report draws a parallel to the current race for AI chips, for example, of NVIDIA and OpenAI essentially driving unprecedented demand, a situation that appears irresistible as Japanese shipping did in 2008. If the momentum cracks, the impact could just be as dramatic. Bitcoin is now sitting right on the top of the same long-term uptrend that has marked every major bottom during this cycle. Each time that support has been tested, it has triggered either a tactical bounce or the beginning of a new structural leg up. That leaves traders at the crossroads. Is this the moment to lean against extreme fear or the moment to get defensive? 10x Research argues that the answer depends not on the headlines, but on the positioning of data, and that currently positioning appears loopside enough to create opportunity. The firm's closing message is blunt. Fear is high, positioning is crowded, and this is when smart money prepares for the next major trade, not when it sits still. In other words, if you are somebody right now inside the crypto space who isn't panicking and is seeing this as the next big opportunity to pile up more into your bags, you're playing it smart. If you don't have enough money to invest inside the market space right now, but you want to, and you know what's going to happen, you're smart still. If you're somebody inside the crypto market space right now, panicking about everything that's happening right now, well, you're on the wrong side of the spectrum, to be fairly honest, because you shouldn't be panicking. As I said a while ago, the reason why you're holding certain crypto projects is most likely due to because you understand those crypto projects, you understand the licenses, you understand the regulations, and you understand what they're going to be bringing to the table in 5 to 10 years down the road. So there shouldn't be any sort of fear whatsoever at all. That's the only reason I hold projects like XRP, for example. I know what it's going to be achieving down the road. I know what XLM is going to be achieving. I know what HBAR is going to be achieving. I know what AVAX is going to be achieving. I know what Ondo is going to be achieving. And the list goes on. I don't hold anything that I don't understand and just go out on a whim and say, that'll do, because that never works out. So what I am trying to say is, and what 10x Research analytics firm is trying to say, is that what's going to be happening next is going to be absolutely ballistic, because we still have the major factor to look up to, which is the regulations, the Clarity Act. Regulations is what's going to make the crypto market space stabilize itself. But because we don't have that yet, and because of a government shutdown that got delayed for the Clarity Act, we're experiencing so much volatility inside the crypto space right before a Clarity Act. Why do you think that is? Why are you experiencing so much volatility, so much manipulation right before a Clarity Act? It's almost like they want to push you out of your positions and create extreme fear. But what you need to remember is, why did you get into the crypto space in the first place? Why did you get into crypto? For a better life. Because you know what's going to be happening ahead of time. You know we're going to go into a digital world. You know we're going to go into a CBDC world. You know everything's going to become centralized pretty much around you. There'll be some elements of decentralization, you could even say. But you know why you go inside the crypto space in the first place. So there should be no panic in whatsoever when markets like this happen. And you have to always look at a timeline. Just look at a timeline. Well, right, this is all happening before a Clarity Act. Before a lot of ETF launches this month and next month and so on. And I'm going to be telling you about something else a little bit later on tonight's live, of what's actually happening behind the scenes and how this world is actually preparing for a digital world, while everybody else is very focused on price action, if that even matters. If you're inside a crypto space for a short-term profit, sure, volatility matters. But if you're inside the crypto space because based on utility, regulations, licensings, then why are you worried about short-term volatility when you know what's going to happen next? And just to put in the perspective, do you think companies like Franklin Templeton, Goldman Sachs, JP Morgan, BlackRock, the list just goes on, all these behemoths inside the crypto space, just the American companies, excluding the Hong Kong companies, the Singaporean companies, the UAE companies, the European companies, the Australian companies, the British companies, the Canadian companies, the Latin American companies, excluding all of those, just all the American companies. If this is a dying market space in any sort of a way, why are these behemoths inside the crypto space? Why is BNY Mellon creating crypto services in a market situation like this? Why is Goldman Sachs creating crypto services in a market like this? Because they see what you don't see. They're seeing the bigger picture. And to be fair, you do see that. But sometimes, not everybody, sometimes, even though you know what's going to happen next, you let the fear of the market get you. Honestly, some people let the fear of the market get to them, and it shouldn't do. You should not be fearing the market in any sort of a way, because the big behemoths don't. So why should you? Now, continuing on with essentially 10x research analytics, and I'll be telling you a little bit more of what's really happening towards the end of the live show as well. Now, weeks later, with the stocks tumbling to $261 and the option premium collapsing to nearly zero, the window closed, and 10x says it's now time to look elsewhere. Historically, bear markets haven't destroyed the fortunes of the great traders. They've created them. 10x research recalls essentially that during the 2008, for example, global financial crisis, Japanese shipping giants appeared untouchable right up until demand evaporated and China essentially saturated the global supply. Investors who reacted early captured extraordinary returns. Yet, according to new essential analysis from 10x Research, the majority of traders calling for a further downside aren't actually positioned for it. And that the disconnect essentially may become the most important catalyst in the weeks ahead. The report notes that despite the louder bearish commentary, positioning has barely changed. Most market participants have remained long throughout the recent essentially downturns and are now coping with the mounting losses rather than rotating to short-term or neutral exposure. That mismatch essentially 10x suggests is usually where real opportunities begin to surface. 10x Research points out that the narratives like 3 years up, 1 year down tend to resurface essentially whenever Bitcoin stumbles. But the market's history shows that essentially inflection points rarely align with the consensus expectations. The research firm also stresses that tactical positioning and structural macro essentially opinions and essentially are two different things. And when too many people think the same way while holding opposite trades, risk-reward dynamics shift fast. Their own October call to turn bearish is highlighted as an example of how sentiment can become too comfortable. Back then, implied volatility on Coinbase surged following earnings and presenting what 10x essentially categorized as an almost one-sided opportunity. sell volatility, and collect roughly 5% into mid-December 2025, as long as Coinbase stayed under $390. So honestly, what 10x research is trying to say to people is, we went through this. It's not the first rodeo of a market downtrend. You know what's going to be happening after the market downtrend is ended, and we know what's going to be happening for real. A Clarity Act, more ETFs on the way, and the world going digital. So where's the fear? There should only be fear if you're a short-term trader. If you're a long-term trader or a long-time holder, or positioning yourself for a better life for 5 years, 10 years, 20 years, whatever down the road, then where's your fear? There shouldn't be any, in any sort of a way. On that note of what's actually happening in the real world, for example, while one side is selling and creating fear to make everybody think a digital world isn't coming and crypto's doomed, on the other side of the spectrum, the UAE, for example, the UAE Sovereign Fund has just now acquired 16 million Bitcoin ETF shares. Now think to yourself for a second, if this market is doomed in any sort of a way, then why is the UAE Sovereign Fund acquiring 16 million Bitcoin ETF shares? Do you think they don't have intelligent research teams that could probably tell them this market is doomed, get out while you can? So why is the UAE buying? Because they see the bigger picture. UAE sovereign wealth funds, essentially, and Abu Dhabi Investment Council have acquired over 16 million shares in US-listed spot Bitcoin ETFs, primarily BlackRock's iShare Bitcoin Trust, by the end of 2025. This acquisition highlights a strict interest by UAE's financial institutions in diversifying into digital assets, reflecting Bitcoin's role essentially in global financial markets. The Abu Dhabi Investment Council, both leading Gulf institutional investors, are now among the top holders of Bitcoin ETFs. Their combined stake exceeds essentially 16 million shares, valued at over $925 million as of late Q1 2025. With managing assets over $300 billion, these institutions underscore a significant shift for regional crypto investment strategies, marking an official stance through SEC filings. The sheer essentially economic impact of these investments is absolutely notable. As it points to institutional confidence in Bitcoin, potential streak asset, no direct statements on additional cryptocurrency interests have been disclosed so far. But it positions the UAE as a key player in global finance, essentially, landscapes. The long-term digital asset acceptance of Gulf essentially nations could spur markets and tech essentially innovations through specific outcomes and remain speculative. We may view Bitcoin as a store of value similar to gold. As the world moves towards a digitalized future, Bitcoin will play essentially an increasingly important role alongside gold, said Abu Dhabi's Investment Council. While broader market responses and possible technological integrations are currently speculative, historical trends do suggest that such large-scale institutional allocations typically enhance Bitcoin's market perception and stability, and for the cryptocurrency space in general. As these funds continue to grow, other cryptocurrencies might experience indirect benefits, which is typically what happens. Although Emirates' attention seems primarily right now focused on Bitcoin's footsteps, but they haven't made any sort of comments of are they going to be expanding or they're not going to be expanding in general. But it does add indirect value to other cryptocurrencies. So what we're experiencing right now is the market space, the downtrends we're experiencing, the crazy fear panic situations that we're experiencing. The UAE fund is buying ETFs. Now, why would they do that if this was a doomed market space? Because it creates a buying opportunity for what's about to happen next. Simple as that. Now, also, moving on from that for a second. Two, the advocacy groups. Before we talk about the advocacy group, let's go inside the comment section first. Let's see what's happening there. As I said previously, this is essentially live, which means if you do have any questions or statements or comments, go for inside the comment section. More than happy to help you out. So let's go inside the comment section first, and then we'll go straight into the next news on tonight's live. Let's see where we're at. Richard, good to see you as well. How you doing? How you been? Mickey, good to see you as well. How you doing? Even the Miles CMF, how did your business trip go? Joe, it went brilliant, the business trip. Good evening, Miles. Great to have you back, and I hope you had a good, profitable business trip. Let's go, Addy. Thank you so much. Good to see you as well. Good day, Mike. Good day, Miles and CMF. Mike, good to see you as well, brother. How you doing? Miles, are we better off selling our portfolios right now and maybe buying back in at a later date or lower prices? No, definitely not. Worst move ever. Do you know how long this nightmare will last? It will last up until essentially there's a liquidation sweep or we get a Clarity Act in place. This is when the smart money moves in 100% facts. 100%. Also, regarding what Funky Brother asked, it's not financial advice in any sort of a way. It's just personally, I wouldn't sell all of my positions in any sort of a way to jump back in at a low, essentially at a lower price point, for example. I'm in it for the long haul. You know, catching a little bit more doesn't really matter to me in any sort of way. If it does to you, then that's a different essentially scenario. But again, that's a very, very risky play to sell off your entire portfolio to jump in at a better price. I wouldn't recommend that for myself, is what I would say. Not financial advice at all. I wouldn't do that. Miles, don't you find it a big coincidence that, and I agree with Shelley 100% regarding this is when the smart money moves in, 100% facts. Now, Miles, don't you find it a big coincidence that Epstein files / subpoena comes out this moment right before ISO and a Clarity Act, crazy times ahead? I agree. There's so much distractions in play. And there's one very, very big distraction, which again, nobody's talking about, which we're going to go from towards the end of the live show. When is the Clarity Act going to be approved? Should have been approved 42 days ago, to be fairly honest. Quarter 4 is what we're looking at. Good night also. Good night, Ian. Miles and Davey, good to see you as well. How you doing? How you been? Hi, Miles and CMF. Stormy, good to see you as well. How you doing? Hello, Miles and my CMF members. Scott, good to see you as well, brother. How you doing? I hope you had a good day. Let's go, Scott. Welcome back, Miles. Thank you, Scott. Good to see you as well, brother. Why is BlackRock selling so much Bitcoin ETFs? It's not BlackRock that's selling essentially Bitcoin ETFs. It's the clients that are holding essentially their Bitcoin ETFs with BlackRock. I just want to make one thing very clear. Whenever you see news, for example, BlackRock selling Bitcoin ETFs, Franklin Templeton selling Bitcoin ETFs, and Goldman Sachs, and the list just goes on. All these institutions, it comes on the news, they're selling Bitcoin ETFs. They're not selling Bitcoin ETFs. It's their client base that's holding their Bitcoin ETFs with them that are selling their positions. It's not the institutions themselves. It's their client bases that's essentially selling. The institutions themselves are not selling. BlackRock is not selling Bitcoin ETFs. It's institutions that essentially it's the clientele that essentially they hold their assets with BlackRock that's selling their assets. Just want to make that clear. You have been telling, so regarding the clientele, many reasons. It could be market manipulation, or it's just some of them actually fearing their positions and they don't understand what they're really holding. You have been telling us for 3 years, Miles, this is the shakeout you warned us about. It's now here. This is the final shakeout. I agree 100%. I have been telling everybody for about 3 years, roughly, that the last stage is always going to be frustration. They're going to put you through hell. I said this to everyone 3 years ago. I said, before we go into a digital world, before we have a position for a digital world, before the regulations and everything falls into place, they are going to be putting you through hell. And frustration is going to be the last stage, which is what everyone is experiencing right now, which you shouldn't be. And I warned you you'll be experiencing this about 3 years ago. Miles, a successful business trip, correct? Yes, it was. Good to see you, Scott. And Shelly, facts. I have been saying this. Actually, I have been saying this for about 3 years. Hi, Miles and CMF. Peg, good to see you as well. How you doing? Are we still in the bull run, in your opinion? Oh, and when do you see we will have a parabolic rise of the alts? When do I see we're in a very manipulated market space is what I would say. We should have been experiencing a run, but we couldn't due to a government shutdown, due to Clarity Act being pushed back, due to the SEC not being able to file in essentially ETFs, which then made the filers essentially go through 8A, essentially regulation to pass them through. And regarding a parabolic essential rise of alts, we need a Clarity Act. We need a Clarity Act to get out of Bitcoin's shadow. The crypto space will do so much better the moment it could get out of Bitcoin's shadow. But because we are still standing behind Bitcoin as an entire crypto space, every time essentially Bitcoin experiences any sort of volatility or following tech stocks or goes on a sort of rampage, unfortunately, we're stuck behind it and we don't have a Clarity Act to resolve that issue. So for the time being, the market can be heavily manipulated by one cryptocurrency. But once we get a Clarity Act, no longer will we be following Bitcoin's footsteps and the market won't be manipulated by one currency. So Clarity Act is what's just going to save the day and get us out of that situation and for a parabolic rise to be happening. Not overnight, the moment the Clarity Act is passed, but a bit of time it passes, it will go through. I think all of this is actually designed to remove the retail investors from the market. Also correct. And I'll explain why towards the end of the live. The fundamentals of XRP hasn't changed, so absolutely no fee. Here, plenty of positiveness to come, absolutely facts. Nothing's changed. XRP is still going to be leading that essentially financial, in my opinion. No currency essentially comes even close inside the financial sector when it comes to XRP by a mile. Every crypto project has its own, unique essentially positiveness about. I have been dollar cost averaging the last few weeks, including today. Let's go, Scott. Smart play. Now, an advocacy group, proposes DeFi solutions to address global poverty. So a DeFi foundation, essentially education foundation fund, an advocacy essentially organization focused on decentralized finance and has proposed utilizing the technology to reduce costs, aiming to address poverty inside the United States and globally. So a foundation, essentially a blockchain foundation, comes forward and suggests that we can actually use blockchain technology to, eliminate poverty, not overnight, but over time using blockchain. In a blog post today, the group said DeFi infrastructure could potentially save unbanked and underbanked people around the world about $30 billion, essentially about $30 billion annually for reducing remittance costs. The organization cited examples of workers sending funds essentially home and paying fees to do so, which could be reduced by up to 80% with DeFi. The poverty premium, the expenses essentially incurred by low-income households that wealthier essentially individuals are often able to access at a lower cost, persist because essentially the current layered financial infrastructures makes it expensive to serve essentially low-income customers and profitability, said the DeFi Education Fund. And adding to it, nothing is free and DeFi doesn't eliminate costs entirely, but essentially by removing intermediaries and leveraging softwares rather than the outdated financial systems, we can dramatically reduce the cost of financial services for everyday people and give them a greater control of their finances. I agree 100%. Many advocates have proposed utilizing various applications of blockchain technology to address factors that contribute to poverty, such as essentially reducing transaction times, eliminating or reducing fees, and increasing access to financial services. The DeFi Education Fund cited the increasing cost in the US associated with essentially cashing paychecks without a bank account, using money orders, and owning a home. While only 3% of Americans are very familiar with DeFi currently, there is substantial openness to its core proposition, said the fund. A majority of American adults find DeFi features appealing. 56% value having full personal control over their money at all times. 54% want full personal essential control over the security of their personal and financial data, and 53% want to see their full financial history at all times. In the US, lawmakers in Congress are inching closer and closer to consideration of a comprehensive digital asset market structure bill, which is the Clarity Act. Although Republicans on both the Senate Agriculture Committee and Senate Banking Committee have released their versions of discussion drafts for the legislation, questions remain about the final bill and what will look like after baptism talk. In October, several Senate essential Democrats on the Banking Committee repeatedly pushed back against the Republicans' draft bill regarding DeFi. The lawmakers also sent proposals that could restrict decentralized finance protocols under specific circumstances. I'll put it to you very simple. The Republicans are against the banking infrastructure. The Democrats are with the banks. So you can see where the push and shove is coming from. Where the Republicans want a decentralized cryptocurrency world, or essentially decentralized cryptocurrency America, while the Democrats want a banking infrastructure, essentially America, where the banks are still in control. This is where essentially they stand on the side of the spectrum. This is why the Democrats were pushing against the Clarity Act, and this is why the Republicans were pushing for it. Because one are being paid off by the banks and the other one isn't being paid off by the banks. And the main reason, if anybody still didn't know till this day, why Trump and his family are very, very big on the idea of cryptocurrencies and Bitcoin's future and so on, is because when Trump decided to become essentially president one last time, which he succeeded at, when he was trying to essentially run for presidency again and try to go to the banks to get some sort of loans, or his family members were trying to get some sort of banking loans and so on, they were technically being rejected. And they felt like they were being pushed to the side by the banking world. So every single one of them pretty much jumped into crypto. Every single member of Trump's family is pretty much in crypto right now. They're CEOs of multiple crypto companies. Trump himself is the biggest advocate for crypto, because he saw the monopoly that the banks have on the financial system, and he wants to end it by using crypto. While the Democrats want that to continue, and they love the idea of the banks having monopoly because they're being paid off. While the Republican side, or Trump's side, hate it. They hate the monopoly that the banks have on the system. You could tell how much monopoly they have when they use 42 banking, essentially when they use all the banking associations to tell the OCC to not approve any crypto companies for a banking charter license. Now, Regarding essentially what's also happening inside the market space, moving on from that to the ETF outflows and the inflows and so on. Let's not forget there is still a lot to come inside the crypto space, and it's all positive. If you put aside this whole short-term market volatility before a Clarity Act and multitude of ETFs, put that aside, this is what's actually happening. ETF waves looms at Bitwise, essentially, as Bitwise's Matt Huggins sees 100+ crypto products ahead. So, Bitwise's CIO, Matt, has come forward and essentially said to the entire world on CNBC Squashbox, where they talk about business essentially, that what's coming ahead for the crypto space and the world is a digital future. And we're going to be expanding even further inside the crypto space. So what's happening right now inside the crypto space is irrelevant. The market, the short-term volatility we're having inside the market space is irrelevant for what's about to come. The reopening of the US government and renowned essentially movements on legislations may set up one of the largest expansions in crypto investments and product to date. According to CNBC's Bitwise CIO Matt, said these developments could open the door for more than 100 new ETFs, crypto ETFs, and ETPs, creating what he described as the ETF Palooza. His remarks essentially come during a difficult period for digital assets, yet he believes the next major shift will essentially center on index-based crypto baskets designed for long-term exposure. Matt pointed to the growing demand for products that allow investors to hold broad essentially slices of the market rather than individual tokens. Notably, he said many essentially new entrants prefer diversified exposure because they do not want to choose between networks like Ethereum, Solana, or Bitcoin, and they want baskets of cryptocurrencies. This is good. That's essentially showing that institutional essentially clientele are now going on the side of, they're tired of having just Bitcoin or Ethereum ETFs. They want to have a basket of crypto ETFs. However, even with the market's weakness, Matt maintained that index products will gain relevance as legislation advances. He noted that supportive policies may help structure the next phase of the product development and broaden access for traditional investors who want measured stake in crypto. The broader context involves Matt, essentially Bitwise's ongoing product activity. The firm launched its Solana, for example, staking ETFs, a fund that holds only Solana and stakes nearly all tokens on chain. According to the firm's website, staking rewards flow back into the portfolios, creating a cycle that tracks the network's participation. The ETF essentially has fallen 27% since its launch, though it moved 9% higher, reflecting essentially the volatility environment surrounding new digital asset products. This backdrop connects directly to Matt's outlook. He said that new buyers often seek limited allocations rather than concentrated bets, which fuels essentially interest in crypto baskets. He expects these preferences to shape the next wave of launches as firms position new offerings for long-term portfolio use. In other words, Matt is saying prepare yourself not just for crypto ETFs and a Clarity Act, but also prepare yourself for baskets of crypto ETFs. For example, a crypto ETF that's combined with Bitcoin, Ethereum, XRP, Solana, AVAX as a bundle, and expect 100 different types of crypto ETFs plus. His views aligns with essentially his expectations that policy progress may accelerate product development across the sector. Together, their assessments highlight a turning point as the market waits for regulatory clarity and prepares for a significant expansion in crypto-linked ETFs and ETPs. And on the topic of Bitwise, essentially basket of crypto ETFs, SEC approves Bitwise's 10 ETF as XRP demand, also essentially XRPs inside the basket as well. The U.S. Securities Exchange Commission, SEC, has approved the New York, essentially the NY and the New York Stock Exchange's ACORA to list the Bitwise 10 Crypto Index ETF, a regulated product tracking the 10 largest digital assets inside the market. The decision essentially marks another step in the SEC's gradual expansion, essentially of approved investment vehicles, following the increased essentially interest created by this month's XRP ETF launches. The Bitwise 10 Essential Crypto Index ETF would hold a diversified portfolio that mirrors the Bitwise 10 index. According to the SEC filings, the fund must keep at least 85% of its portfolio in assets already approved for the ETF, with the remainder capped at 15%. So here is essentially what the portfolio is: 78.7% Bitcoin, 11.1% Ethereum, 4.97% XRP, 3.0.3 essentially Solana, and smaller allocations to ADA, SUI, Link, AVAX, LTC, and DOT. Daily NAV also would be calculated using CF benchmarks, referencing session pricing at 4 p.m. Eastern Time. Shares will be created and redeemed in large blocks for cash. The approval makes Bitwise Fund one of the most comprehensive crypto index products on the US exchange, offering SEC regulated exposure across major assets, including essentially XRP. The SEC's approval follows a widely watched ETF debut early this month. Also, on November 14th, for example, the Canary ETF XRP that went live absolutely smashed it. The XRP Canary ETF absolutely smashed out the park. The fund's in-kind essentially creation processes, letting issuers transfer XRP directly instead of cash, and helped inflows exceed trading volumes. Analysts say the structure unlocked a pent-up institutional demand after Ripple's regulatory wins earlier this year also. And XRP has one of the strongest retail communities in crypto, said Ming Zhang of essentially Presto. Nobi CEO Lawrence Samantha noted that continued inflows would signal long-term institutional positioning. With New York Stock Exchange ACRA cleared to list the Bitwise 10 ETF, investors are now weighing in how index-style crypto products will compete with single assets like a Bitcoin ETF or an Ethereum ETF. And the approval signals essentially the SEC gradual shift towards broader regulated crypto exposures with clear pricing and oversight. As an XRP ETF inflows surge and Bitwise's readiness in index products, analysts expect more diversified funds to follow. Whether momentum lasts into 2026 or a single asset ETF dominates the space, one thing is clear: regulated crypto index investing has officially arrived on the New York Stock Exchange, which is an amazing footstep to be taken. Now, moving on from ETFs and just talking about Trump for a second and the Fed, most importantly. But in general, a basket of ETFs is always going to be working out very well because it gives exposure to multiple cryptocurrencies, which makes it a much more appealing ETF compared to the rest, unless there's an ETF out there that offers staking, services, and so on. But now, Trump and the Fed. As you all know, Jerome Powell's essentially Fed chairmanship is coming to an end in 2026. So somebody has to replace him. And everybody inside the crypto space obviously wants somebody that is pro-crypto. We want Jerome Powell out because he's like Gary Gensler 2.0. And we want somebody in that is pro-cryptocurrencies and essentially helps to bring innovation towards the table with the Fed and the crypto space. So Trump says he has picked who is going to replace Jerome Powell. The US President Donald Trump has made headlines again. This time by stating he already knows who essentially will replace Jerome Powell as chair of the Federal Reserve. While Trump didn't disclose the name, the statement suggests a major shift in future U.S. monetary policy, especially if Trump essentially especially that Trump essentially has the presidential seat now, obviously winning the presidency, him choosing who is going to be running the show. Trump has often criticized Jerome Powell and the Federal Reserve in the past, especially over federal interest rates. His latest statements fuel speculation that more a dovish, essentially politically aligned Fed chair could take the reins, and possibly favoring lower rates and more aggressive monetary easing. Such a shift would impact not only traditional markets, but also crypto and risk essentially assets, which historically perform better in looser monetary environments. Investors and analysts are now watching for clues on who Trump's pick might be, ranging from well-known economists to loyalists aligned with his policy and vision. I'll be very honest, we know for a fact whoever Trump chooses is going to be, on Trump's side, with Trump's essentially administration, a pro-crypto person, because it's most likely going to be all of those things, 100%. It's not going to be anybody that the Democrats like. Just put it out there. By Democrats, I mean the politicians. Now, moving on from essentially who Trump is going to be choosing, and he hasn't mentioned any names, but he has said he's already chosen who is going to replace him, which is great news, to be fairly honest, which means no wasting time. The moment Jerome Powell's out the door, the other one can enter through the door, obviously with the sit-downs he's going to be having. Now, Kraken is what we're going to talk about next inside the cryptos, essentially on the live show tonight. Moving on from Trump and who he has chosen essentially to replace Jerome Powell. to Kraken's IPO. So it seems that Kraken is going to go public. Kraken submits a confidential draft IPO filing to the SEC. Now, again, if we're in a failing crypto market space, this would be a bad maneuver. Now, the reason why Kraken is essentially filing for an IPO is because we're not in a failing crypto space in any sort of way. We're just in a manipulated crypto space. Manipulation is very different to failing and collapsing. Payward Inc., the company essentially operating the global cryptocurrency exchange Kraken, has formally begun the process essentially of becoming a publicly traded firm. The company disclosed that it essentially confidentially submitted a draft registration statement on form, essentially S1 form, to the US SEC. The form S1 is essentially standard filing used by companies preparing, obviously, for an initial public offering IPO of common stock. The Wyoming essentially based company said the various financial details haven't been decided yet, and this includes essentially the exact volume of shares it wants to offer and what the potential price range for the proposed offering essentially will be. Kraken is one of the major digital asset trading platforms globally. It has joined essentially an increasing list of cryptocurrency focused companies that are looking for a way to access essentially public capital markets. The move essentially by companies to confidentially also file a draft S1 represents essentially corporate decision towards becoming a publicly traded company. An IPO is essentially generally considered the next step for a mature private company. While these public statements did not essentially articulate specific strategies and goals, the move typically essentially provides a way for a company to raise serious operational essentially expansions and capital, bringing liquidity to previous investors and employees, and potentially increasing the company's publicity and perceived essential solidity within the regulated financial ecosystems. A confidential filing allows Kraken to begin its discussions and review with the SEC away from immediate public scrutiny. The IPO will not be carried out until the SEC has conducted a complete review of the product, essentially provided draft registration statement, and additionally, eventual essential timing is subject to favorable market conditions and other factors that could impact offering success. Kraken emphasized that the press release does not constitute anything other than an announcement made essentially pursuant to Rule 135 under the Essential Securities Act of 1933, as amended, and explicitly mentioned that this communication shall not be deemed an offer to sell or solicitate of an offer to buy any securities, that all actual sales or purchases will be strictly subject to specific registrations and requirements of the Securities Act. Again, if this essentially is some sort of a dying crypto, essentially, the crypto is dying in any sort of a way, or failing or collapsing or whatever it may be, the companies like Kraken wouldn't be filing an IPO, or the UAEs essentially wouldn't be buying in any sort of a way in terms of Bitcoin ETFs. Now, moving on from Kraken to Ondo, which is a crypto project we rarely talk about, and it was the crypto project that I mentioned day one when it first came through the gates. But Ondo Finance gains approval for tokenized stocks in Europe. It's quite a big move. Ondo Finance, led by CEO essentially Nathan, received regulatory approvals from Liechtenstein's FMA to offer tokenized stocks and ETFs across all 30 EEM essentially markets, enhancing access for investors and utilizing essentially their technology for settlements and custody. This approval marks a significant step for Ondo Finance and potentially reshaping market access and investor experiences in the EU. The financial market essentially is undergoing a transformation as Ondo Finance secures approval for tokenized stocks and ETFs in Europe by leveraging essentially Liechtenstein's regulatory frameworks, and they aim to offer institutional-grade financial products to broader audiences. The leadership team, led by essentially Nathan, envisions this as a crucial move towards democratizing access to equities. Securing EU regulatory approval enables Ondo to deliver on our mission, bringing essentially accessible institutional-grade financial products to global investors in a fully compliant manner, said the CEO of Ondo Finance. With their focus on US stock tokenization, which includes giants like Tesla and Apple, the European landscape is set for change. The approval allows Ondo to capitalize on the EU passporting standards, aiming to streamline process across all 30 EEA markets. It's quite a big play for Ondo, to be fairly honest. Now, moving on from Ondo to this. So, I wanted to know what else is happening behind the scenes. And this is something that nobody's talking about inside the crypto space yet. But I do believe after this live show, everybody's going to be talking about it on X. So, typically when there's massive distractions inside the market space, something else is happening behind the scenes. Something major technically is always happening behind the scenes when there's massive distractions. So what is happening behind the scenes when we're experiencing so much manipulation and so much volatility right before a Clarity Act? What could it possibly be to create so much fear inside the market space to make some people sell their positions even when they know what's about to happen next? Well, everybody remember, a digital world that's going to be happening, CBDCs? That's what's been happening behind the scenes. While everybody's been very, very focused on crypto, such as price points and price actions and market volatility and fear panic indexes and analytics reports, CBDCs have been thriving behind the scenes during this month. Isn't that interesting? That cryptocurrencies are going through extreme manipulation and volatility stages, and the same month, CBDCs are thriving behind the scenes. It's almost like they're pushing you out of your positions before a digital world starts. So here it is, CBDCs in 2025, a global monetary revolution or a digital surveillance state. By November 2025, the once theoretical concept of central bank digital currencies, CBDCs, has firmly transitioned into a tangible reality for nations worldwide. With over 130 countries now actively exploring and piloting or having launched their own digital fiat, the global monetary landscape stands at the precipice of its most significant transformation in decades. From Bahamas' sand dollars to China's expensive digital yuan trials, and central banks are grappling essentially for promises of greater financial efficiency, aimed at escalating concerns about privacy and state control. The urgency behind CBDC development has intensified, driven by essentially conflux of factors, including the rise of cryptocurrencies, the demand for more efficient payment systems, and geopolitical considerations. So, this month, CBDC research, piloting, or some sort of study stages have skyrocketed between countries. The same month the crypto space is experiencing extreme volatility is the exact same month that CBDCs are skyrocketing. China's digital yuan continues its large-scale essentially rollout, expanding beyond domestic use. Here's some of them, for example, beyond domestic use to explore cross-border applications, positioning itself as a leader in sovereign digital currency and implementation. The European Union's digital euro expected to move into its realization phase by late 2025. With policymakers addressing critical design choices and around privacy, offline functionalities, and intermediaries. The United States digital dollar. Research remains a key area of focus for the Federal Reserve, weighing in the benefits of innovation against potential risk to financial stability and essentially individual liberties, with no immediate launch date projected, but significant foundational work on the way. Emerging economies, many developing nations are essentially accelerating their CBDC projects, viewing them as a pathway to greater financial inclusion and a means to bypass traditional correspondent banking efficiencies. One of the most debates surrounding CBDC centers on the tension between financial efficiency and individual privacy. While prominents argue that CBDCs can streamline transactions, reduce costs, and combat illicit finance, critics voice significant oppression over this potential for unprecedented government surveillance. Unlike physical cash, which offers such autonomy with essentially a digital lender, could theoretically provide central banks with a view of every transaction. While many central banks are exploring privacy-enhancing technologies such as essentially tiered access systems or privacy by design principles, the public remains wary. The core challenges lies in designing a system that offers the benefits of programmability and traceability necessary for monetary policy and financial integrity, without sacrificing the fundamental right to financial privacy. The introduction of CBDCs carries profound implications for existing financial architectures and the levers essentially of monetary policy. Commercial bank, essentially, a significant concern is that potential bank run scenario, where essentially individuals might opt to hold their funds directly with the central bank in digital form, bypassing commercial banks, especially during times of crisis. And central banks are designing essentially safeguards such as holding limits to mitigate this risk. This is why the Bank of England essentially suggested that there's going to be limits on digital pounds, for about £20,000 essentially you can hold in stablecoins in British pounds, and 10 million essentially for corporations. This limit is set so that people don't essentially run away from the banking systems that they already have and just stick to the centralized banks. So that Lloyds Bank, Barclays Bank, HSBC Bank, JP Morgan Bank, and the list goes on, can still be relevant in a digital world. Because if you could just use your centralized bank for CBDC payments, then what's the use case of those banks? But by putting limits, which is exactly what the essential Central Bank of England did, by putting limits on the amount of stablecoins you can hold, the other banks don't have the same limits. Programmable money. The ability to program CBDC introduces new avenues for monetary policy. For instance, targeted stimulus packages or experimenting with expiring dates on certain funds could be implemented, offering essentially unprecedented control over economic activity. Through this also raises ethical questions, because it does. Imagine holding a currency that expires. Cross-border payments. CBDCs offer the promise of a cheaper, faster, and more transparent cross-border transaction, potentially disrupting SWIFT's system and fostering a greater global financial integration, especially if interoperability standards can be established. In other words, why would, for example, centralized banks around the world need a payment system or a messaging standard like SWIFT, when they can have their own systems that connects to each other without some sort of a third party like SWIFT, which is why SWIFT is going to become the next blockbuster. As of November 2025 unfolds, the global pursuit of central bank digital currencies has moved beyond theoretical discussions to practical implementation and widespread debate. While the potential for enhanced financial efficiency, inclusion, and innovation is undeniable, the journey is absolutely complex, marked by essentially delicate balance between technological ambition and fundamental societal values. The ultimate success and acceptance of CBDCs will hinge not just on their essentially technical powers, but their ability to build trust and address deep-seated concerns of citizens globally regarding privacy and financial autonomy in an increasingly digital world. Isn't that interesting? The same month that the crypto space has been genuinely experiencing extreme manipulation. The crypto space has been experiencing extreme manipulation this month. Right before Clarity Act, right before ETFs, everybody's focused inside of the crypto space. If you go on X right now, inside the crypto space, everybody is talking about price action. Everybody's talking about, oh, XRP is reaching this level, Bitcoin is reaching this level, Ethereum is reaching this level, Solana is reaching this level. This, when is it going to end? When is the madness going to end? Why is there extreme fear? Why is this happening? Why is this happening? And nobody's talking about CBDCs, which is what's happening behind the scenes. And it's genuinely, if you go to X right now, everybody's talking about price action, which means there must be something else behind the scenes, which is this. It's CBDCs. And that in this particular month, it's intensified. CBDCs are on a whole nother level right now, in this month especially. Let me give you another example of what's happening in the CBDC world today. Mansour bin Zayed launches the first cross-border CBDC payment initiative between the UAE and China today. And if you're wondering who's Mansour bin, he's the sheikh, essentially, of the UAE. The royal family of the UAE today launched with China a CBDC cross-border payment system. The Sheikh Mansour bin Zayed, essentially vice president and deputy essentially prime minister of the UAE, recently essentially hosted the Pan-Governor of People's Bank of China. The meeting marked a significant milestone essentially as Sheikh Mansour executed the first cross-border payment using central bank digital currency CBDCs between the UAE and China through the mBridge network. The gathering also celebrated the successful interlinking of financial infrastructures between both nations. Attendees included Khalid Mohammed Balam, the governor of the Central Bank of the UAE, Zhang Yim, the ambassador of China to the UAE, and other senior officials. These events highlighted key projects aimed at enhancing financial cooperation. The inauguration of the Mbridge platform for CBDCs was a focal point. This platform, developed with Emirati and Chinese banks, aims to facilitate cross-border payments by reducing transaction costs and enabling instant settlements. Plans are on the way to expand this platform in 2026 by including more centralized banks to boost economic prospects. Another significant development is the interlinking of payment systems between the UAE and China. This integration allows users in both countries to conduct secure instant money transfers anytime. It supports various use cases such as scholarship transfers for Emirati students in China and remittances for Chinese residents in the UAE. The launch essentially of the first multi-scheme prepaid card named Union Pay marks another milestone. The card reflects collaboration between the UAE's Yuan scheme and China's Union Pay. Issued with Lari Exchange Partnership, it ensures global acceptance through Union Pay and extensive networks while processing transactions locally within the UAE. Khalid Mohammed Balam and PAN essentially signed a MOU to enhance corporations in cross-border payments and CBDCs. The MOU focuses on developing financial infrastructure and supporting joint streak initiatives that deepen partnerships between both countries. Commenting on these advancements, essentially, Sheikh Mansour bin Zayed stated, "These advanced initiatives reflect the depth of street partnerships between the United Arab Emirates and the People's Republic of China, and open new horizons for economic, financial, and technological cooperations. The introduction of these initiatives represents tangible steps towards creating a modern financial infrastructure that encourages innovation by facilitating seamless, essentially cross-border payments. They enhance the UAE's competitive edge and leadership in global financial innovation." UAE and China wasn't the only CBDC news today. Singapore also today advanced so much in CBDC. So did Hong Kong. So did Japan. So did China. So did essentially Brazil in CBDCs today. This month, a lot of countries advanced a lot in CBDCs. The exact same month, cryptocurrencies experienced extreme manipulation. Do you not see essentially what's happening? Before we're going into a CBDC world, essentially, before we go into a CBDC world, we're experiencing extreme manipulation right before regulations and right before a CBDC world. As if it's almost coordinated to push you out of your positions. If you look at the bigger picture, if you zoom in, all you're going to be seeing is price action. And that's what everybody's talking about inside the crypto space. Everybody's talking about charts, everybody's talking about analytics, everybody's also talking about liquidations and everything else. And the price points of crypto assets. Bitcoin reached this price, XRP reached this price, Solana reached this price, AVAX reached this price. But if you look at the bigger picture, all of this is happening right before a Clarity Act, right before a multitude of ETFs, and right before a CBDC world, which this month, interestingly, being the month of extreme CBDC testings and piloting and everything else for a lot of countries. They've essentially, I would say, in any sort of way, this doesn't almost seem like a coincidence in any sort of way. It seems more coordinated with the level of manipulation. Honestly, if you're worried even for a second, if you're worried genuinely, if you are worried even for a second regarding, what's happening inside the crypto space, don't be. Because one, you know the crypto projects you're holding, and you know the future that's going to be, coming towards you because of the crypto projects you're holding. Because you might be holding crypto project like XRP because of the regulations and the licensing and the banking charter license and the ETFs, or everything else you may be holding, XLM, HBAR, AVAX. You're holding these crypto projects based on what they're going to do in 5 years, 10 years time, not based on what they're going to do in months time. Second, a Clarity Act is on the way, which is going to change the game of crypto forever as we know it. A Clarity Act will introduce, essentially, for every cryptocurrency, clarity. And cryptocurrencies that have genuine, true potential for the market space will do extremely well. And the projects that have been bluffing all the way along will do absolutely nothing under the Clarity Act. This is why you have to be positioned so well inside this market space. And the most important thing, moving away from Bitcoin's shadow is the biggest thing that's going to be so much, it's going to bring so much joy to everyone inside the crypto space. Moving away from Bitcoin's footsteps. That's what the Clarity Act will do for us. And 3, don't forget what's coming next. Putting aside the ETFs and the Clarity Act, a CBDC world, a digital world where everything will pretty much be centralized. So if you're thinking to yourself for a second that, the crypto space is done for, I'm doomed, I should be jumping out of my positions inside the crypto space, or you're panicking and you're fearing, just remember what's about to happen next. CBDCs, programmable money, 15-minute cities, social credit systems, your entire digital identity wrapped into one. I'll give you an example. In the UK, they forced every company's founder essentially to get a digital ID. If you own a company in the United Kingdom, you were pretty much forced to get a government.uk1 login, which is a digital ID. Then they introduced it essentially in the NHS in the UK as well, where everybody's now signing up essentially through the NHS, through their digital NHS app. What I'm trying to say to you, and the main point I'm trying to make, is that it's all happening. A digital world is pretty much here, but you just can't see it yet. In the forms and the apps and the government apps that you're all signing and approving and accepting, you're approving a digital ID for yourself. You just don't know it yet. A digital world is already pretty much here. And this month, extreme volatility that we did have inside the crypto space is the exact same month CBDC started skyrocketing in terms of research and piloting. Sure, we'll count that one as coincidence. Definitely not. Remember the bigger picture of what's going to happen next. What you're experiencing now is nothing. Look at what's going to be happening next. I'm telling you right now, if you're inside the crypto space, you haven't made the wrong decision. You've actually made the best decision of your lifetime if you're inside the crypto space. Not the worst decision. This is your best decision to be inside the crypto space of what's about to happen next. On that note of you are actually going to be well off rather than down and gloomy, we have reached the endings of tonight's live. And I'm so happy to be back. And I really wanted to share with you that angle of CBDCs because nobody's talking about it inside the X community, inside the crypto space. I've went, essentially for the past 3 days that I've been on a business trip, I've been looking at essentially X on TikTok, everywhere. Nobody's talking about CBDCs. Typically, when something big as this happens, something else is happening behind the scenes. Don't let them push any positions. And regarding XRP, essentially, Bitwise, essentially XRP going live tomorrow. It's by the looks of it. XRP, essentially ETF, is going live tomorrow. And GX XRP, which is essentially for Grayscale, that's also going to be live tomorrow as well, apparently. So let's see. Before we do go, obviously, let's go inside the comment section first. This was happening there, and then we will call it a night. Let's see where we're at. Peg, good to see you. How you doing? How you been? I want to also do over here. Miles. The fundamentals of XRP hasn't changed. Facts. I'm not considering facts. Miles, what is the Clarity Act will do? Will decouple us from Bitcoin? Yes, the Clarity Act will introduce utility towards the crypto space. Is what it will do, Mickey. It will introduce clarity. It will essentially introduce utility over time inside the crypto space. So all the utility the crypto projects have been promising can actually go into motion, depending on if they were bluffing or if they were genuine. Retailers, brothers and sisters, do not allow yourself to be pushed out of the markets. Facts, what Scott said. Show us some support for Miles and like and repost the lives. There's plenty watching on X I haven't done yet. Let's go. Shelly, thank you so much. Definitely like, comment, and essentially follow if you already haven't. CMF members, please do smash those like buttons and retweet buttons. Please advise me. I have 400 XRP holding. That's a great amount. I'm not advising you sort of way, but that's a great amount. Thank you for reposting Peg, One Love, Stormy, JP, Free Feather, Joe, Mickey, Funky Brother, Ray, Artistic, Manny, T, David, B, and Pablo. Not sure why the rest of you haven't done yet. I agree. Honestly, thank you so much to everybody who has retweeted and smashed the like buttons from the CMF. And the members that did do this was Peg, Shelly, One Love, Stormy, JP, Free Feather, Joe, Mickey, Funky, and Ray, Artistic, Manny, T, David B, and Pablo. The rest of you haven't liked or essentially reposted this live show. I don't know why. Please expert 400 XLP is a great amount to have. Nobody inside the CMF is worried about their assets due to your teachings. Let's go, Joe. Night Miles and CMF. Pablo, let's go. See you tomorrow sometime as usual. Joe, see you tomorrow sometime as usual as well. Where's XLP News? XLP is actually going live tomorrow, ETF. Thank you so much, Miles. Let's go, Stormy. See you tomorrow sometime as usual. Good night, all. Stormy. See you tomorrow sometime as usual. Good night, Miles. Funky Brother. See you tomorrow, but same time as usual. Share the live. Thanks for everything, Miles. I'm glad you had a successful trip and arrived home safely. Thank you so much, Scott. And see you tomorrow, but same time as usual. Night, Miles and CMF. See you tomorrow. Joe. See you tomorrow, same time as usual. Good night, Miles and all the CMF. Thank you for great live and news. JP, let's go. See you tomorrow, same time as usual. Rachel, thank you so much for liking the live show as well, just so your notification. Good night, Miles and CMF. Davey, see you tomorrow, same time as usual. JP, see you tomorrow, but the same time as usual. Good night, Miles and all the CMF. Thank you for a great live and news. Let's go, JP. Let's go, Davey. Thanks, Miles. Such positivity from you. Love it. Have a great night. See you tomorrow, same time. Let's go, Autistic. See you tomorrow, same time as usual. Good night, Miles and CMF. Thanks for all the great news. See you tomorrow. Freddie Forever. See you tomorrow, sometimes as usual as well. Thanks again, Miles, for a great evening. It's good to have you back, and I will see you tomorrow night at the same time. Let's go, Addy. See you tomorrow, sometimes as usual. Addy, like and retweet. Good night, Miles and CMF. Nice to have you back. Let's go, brother. Good to see you as well, Mike. And see you tomorrow, same time as usual. Thanks, Miles. See you all tomorrow. See you tomorrow, SP as well. What about the Franklin Templeton ETF, please? Sorry, I'm late today. Rachel, the Franklin Templeton ETF will be going live tomorrow, if I'm not mistaken. Tomorrow is actually going to be, so tomorrow's XRP ETF is going to be Bitwise is tomorrow. Tomorrow, Bitwise XRP ETF will launch. Franklin Templeton is going to be launched on the 24th. The Franklin Templeton XRP ETF is going to be launched on the 24th of this month. Great live, Miles, as usual. So glad to have you back with your insights. Good night, Miles and CMF. Jason, let's go. See you tomorrow, sometime as usual. Good night, CMF. Denise, see you tomorrow, sometime as usual. We know Ripple is for institutions, but do you think Ripple will have custody for retail? I do believe so, they will, with that banking charter license. Great job as usual, Miles. Thank you and have a great night. Carlos, see you tomorrow, same time as usual. I retweeted and commented on X. Jason, thank you so much for retweeting and commenting on X. Thank you to you, Davey and Scott as well. Let's go. I post and like every time. Does it not show? It does, Matt. Thank you so much for the like and comment. It does show. I saw your repost come up during the live. Thank you so much, Matt, for that as well. Miles, have you read anything from EZA introducing borrowing against your crypto? Dom put a couple of cryptic posts up indicating this could be the case. I haven't, but I will definitely check it out. When will we all be rich? Soon, Rachel, soon. On that note, but I'll definitely check it out, Shelly. And Dom essentially from EZA, genius person, to be fairly honest. I mean, he is one person that I do respect inside the crypto space. The EZA founders, genuinely good people, in my opinion. Now, thanks, Miles. Great live. See you all tomorrow. Let's go, Shelly. See you tomorrow, sometimes usual as well. Okay, we have reached the endings of tonight's live. This was the CMF live show, episode 406, essentially, of the CMF live show. It was absolutely amazing to be back, essentially. And the CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday, Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrency, CBDCs, AI, politics, and regulations. Vital information for you to know about regarding the world complete transforming to digital space. And a disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. See you all tomorrow. Love you all. I'm so happy to be back, and I missed you all. See everybody tomorrow, same time as usual. Night, and thank you. No problem, Rachel. See you tomorrow, same time as usual.